So what can happen and what I'm predicting is that if the yields goes down, it's going to create a havoc in the market, because if the yields goes down and come at par to what the people have purchased, then what will happen is they will start dumping the US Treasury bonds. And I think China might be waiting just for that. India government also might be waiting for just that, because China has $700 billion of bonds. And dollars that they are in in their foreign exchange reserve. India also has 200 to 50 plus, treasury bonds and dollars. So if they have whatever treasury bonds they have, even Japan has, maybe Japan is also waiting for this, that if the yields comes down, then I will go and dump it, and then crash this entire treasury market. So if that happens, then there will be a crash. Then it is when the gold rises actually goes and the real estate prices will go up. But when it comes to stock market and the dollar, that is what the collapse will happen, and that is when US will be unable to take more debt, and then it will be forced to buy bonds in the open market. Then the Fed will be forced, and Fed cannot buy more bonds because there is a level to what they can do, and then the US will announce a new currency. So this is my speculation, guys, that this is the trigger of the bubble. Now you ask, when the bubble will happen, whether it will happen, and what is the trigger for that. This is the trigger: US Treasury bonds. If that dumping happens, and that will happen when the US debt yields goes down. So you can't say that the interest rates will go down and yields will remain as is. This is not a possible scenario, and the market is not telling you that, because if the interest rate goes down, then the debt yields also has to go down. And mind you that the interest rates are controlled by Fed, but Fed doesn't control this debt yield. They may try to control, but the market, these are market driven. If there are no buyers, then you can't say that I am going to pay you lesser yields and still take my bonds. It's not possible. So that is why I say that this is the story which no one is telling you, and this is the one which is the oxygen mask of this US economy. You don't care about the inflation number, you don't care about this unemployment, how much they are spending and all those things, because the key thing is, if the lifeline is not controlled by the US, because their debt yield is what is their ability to take more debt. And if the debt stops, then everything stops in the US. So the ability to take debt is based on what yields they are promising, because that is market driven. And if the yields go down, then then countries will exit, and it will create a crash. And if the yields go up, that is another problem, because then the hyperinflation will be there, even with or without this interest rates going down. So watch out for this. People are showing you this in the market, interest rates, they are showing you inflation number, they are showing you unemployment number. That's all bogus. Those are all not the most important numbers. The most important numbers to look at is debt yield. So if you look at the current yields, they have started climbing up. If the yield dumping happens, still the asset prices will rise and gold will rise. That is why I say that gold and real estate is a sweet spot, and stock market and dollar is not. Because in one scenario the stock market can collapse, and but not in the other scenario, right? So that is why I'm telling that, stay away from the stock market, bet down the real estate and gold, because this is where it is going to be a safe haven in both the cases.